Good morning, everybody. Let me invite you to our day 5 Risk and Regulatory Academy dedicated to most important topics connected to risk and compliance. Actually, right now we have day 5, so basically we are after 4 days of different topics covering different angles of most important risk topics. And right now, day 5 is to the great extent dedicated to financial crime and anti-money laundering. So basically, we'll concentrate on those two events, those two topics during the coming presentation right now and the one in the afternoon. So let me also introduce our guests, if I may ask you to go to the next slide. Today we will have with us Dirk Houbrich, Head of Conduct, Payments and Consumers from European Banking Authority. Hello, Dirk.
Hello there. Good morning.
We have also Nicolas Fleuret, our Global Financial Crime Leader from office in France, in Paris, to deliver the second material, the second presentation. And also myself, my name is Paweł Spławski. On a daily basis, I'm working as a regulatory leader in our Warsaw practice. So hello, everybody. Actually, we have two materials in front of us today. So the first one, this is Dirk's presentation about EBA priorities on anti-money laundering for 2021. And the second one, where we will try to share with Nicolas the information, the, let's say, statement, how we see the financial crime monitoring and the way forward, so the latest tendencies and how they may look for the nearest future. So before we will go into the presentations, let me also quickly on the next slide cover the most important housekeeping rules. So the first important rule is that we would like to kindly ask you to use the chat box and to put all the questions, all the comments into the chat box. We will be scanning them throughout the presentation, and I hope after Dirk's presentation, he will be also willing to take some of your questions. We can also use exactly the same approach, so exactly the same approach to questions and answers after the second material, of course, if we will have appropriate time. The second point, which is important, we could have some kind of a polling questions during our presentations. It's not foreseen for this session, but in general, it may be embedded there. So feel free to put your answers. We may assure that all the answers we receive are anonymous and will be used only on a statistical basis. And the third point is with regard to the audio function. So basically right now, you will be all muted. If you need to communicate, if you want to write to us, please use the chat box and we'll scan the chat box throughout the material, the presentation. So right now I give the floor to Dirk and to his material, and we will come back with the second one after a few minutes.
So thank you very much. Good morning, everyone. It's a pleasure to participate in this event, and thank you very much to Deloitte for inviting me. So I'd like to give an overview of the EBA's AML CFT priorities for 2021. If you could turn the slide, please, that would be great. I only have 10 or 11 slides, and I will go through the following topics. Just briefly summarize how the EBA was created, what sort of legal instruments the EBA has at its disposal that you as financial institutions and other legal entities may be subject to from an AML CFT perspective. I will explain what the EBA's mandate is on anti-money laundering and countering the financing of terrorism. Then I will give an overview of the legal instruments specific to AML CFT that we have issued and that we are actually have issued this year or are issuing this year, so that are very topical. And then I will focus on two of those legal instruments, namely the revised guidelines on AML/CFT risk factors and the opinion on money laundering and terrorist financing risks in the EU. So this will be the outline of the presentation. I will be very happy to answer any questions either during the presentation or for a few minutes after the presentation as well. So thank you. Next slide, please. So the EBA was established by an EU regulation, so it's a so-called level 1 law, EU law, that brought us into being. We were created in 2011 in the aftermath of the financial crisis of 2008-2009, the ramifications of which we are still feeling until the present day. There was a predecessor organization called CEPS, the Committee of European Banking Supervisors, but and the EBA took over some of the responsibilities that this previous committee had, but in a legally much more binding way. And it received additional powers that CEPS didn't have at the time, which are listed here: consumer protection, financial innovation, payments, but also anti-money laundering and countering financing of terrorism. We are an independent authority, and we are accountable to the European Union Parliament and the Council. As the highest governing body, we have the chief executives of the 27 national authorities in what's called our Board of Supervisors. And everything that you read about the EBA that we publish is basically approved and agreed by the EBA's Board of Supervisors. So it's an agreement by the 27 national authorities to implement those requirements, to supervise those requirements, and the 27 national authorities have actually developed these requirements with us in the first place. And finally, we were located in London for the first 8 years of our existence, but then moved to Paris in May 2019 as a result of Brexit, because an EU agency like us, we need to be located in an EU member state. Of course, UK no longer wanted to be part of the EU, so we were relocated, and we were relocated to Paris. And the photograph that you see on the right is our new office building in La Défense in Paris, on the outskirts. Next slide, please. We have a number of different legal instruments at our disposal that we can use, that we can address to either national authorities that are competent for the supervision, for example, of money laundering. There are large numbers.
Dirk, sorry to interrupt you.
Yeah.
We lost you for a second. We lost the voice for the second.
Okay, all right. So I just saw that. Yeah, thank you very much. These legal instruments are the ways in which the legislators, the council, and the parliament decided we would be able to or should be fulfilling our mandate. There are a large number of legal instruments. They're listed here. I will only focus on the first three of them. So the first one are so-called technical standards. Technical standards are EU law. They are directly applicable in EU member states without any national transposition, without any national implementation, as and when they are published in the official journal of the EU. Legal entities and the national authorities have to comply with them. So these are law. Of course, the EBA, we are not lawmakers. We have not been elected by the population of the EU or the member states. So we cannot issue technical standards just out of our own initiative. We have to be mandated to do so by the legislators, so by the council and by the parliament. So there are EU directives and EU regulations that, for example, say the EBA shall develop technical standard on topic X, Y, and Z and submit it to the Commission by that date, after which it will be adopted and then published in the official journal, and it assumes legal effect. And during that process, the EU Council and the EU Parliament have a scrutiny right, so they can intervene and say, we don't like this RTS, how the EBA has developed it, and would like the EBA to amend it because we don't consider it to be fulfilling the mandate that we've given to the EBA. The EBA has issued, I think, around 130 technical standards now in the first 10 years, and such a scrutiny has has occurred once on a technical standard that we developed jointly with ESMA and IOPA on PRIPS, package retail investment insurance products, which doesn't affect the EBA too much, but does affect ESMA and IOPA quite a lot. So these are technical standards. Then distinct from that are guidelines. So guidelines are not directly applicable law. They do require national implementation. So the national authority has to decide whether it wants to implement the requirements set out in the guidelines into their national supervisory and or regulatory framework. And they have to give us, send to us a compliance notification where they have to indicate to us whether they comply or do not comply with these guidelines. And we publish these notifications from all 27 national authorities in a table, in a 2 or 3 page table, so that legal entities in all jurisdictions in the EU can check whether their national authority actually implements these guidelines. And then these guidelines become binding in the same way as any other national requirement of that supervisory authority is binding in that context. And this can differ between national jurisdictions, how exactly guidelines are implemented, because it depends also on the powers that national authorities have. Guidelines, the EBA can issue on its own initiative. So we don't need to be mandated to develop guidelines. We can issue those at our own initiative. And we've done so on a number of occasions, including on AML matters. And then thirdly, it's an opinion and a technical advice, which is a legal instrument that the EBA will not address to financial institutions. It will only address it to either the national authorities and or the European Commission, Council and Parliament. For example, if we see that a particular piece of law as it's been developed by the Council, Parliament and the Commission doesn't work in the way as intended, 1 second please. We might be sending an opinion to the Commission and Council and Parliament in order to tell them that certain things do not work as intended, and then we provide advice on how that law should be amended going forward. So those opinions do exist, and we also have opinions addressed to national authorities how they should carry out their particular supervisory functions in particular areas. So we do issue those as well. Thank you. Next slide, please. So the EBA's mandate now on anti-money laundering is defined in our EBA regulation. So what we are allowed to do is set out in the EBA regulation, level 1 regulation in EU law. And there, the main statement is made already in Article 1, in the first article of the EBA regulation. The authority shall, so we have to, it's a requirement, the authority shall, within its respective competences, contribute to preventing the use of the financial system in the EU for the purpose of money laundering and terrorist financing. So that's been in our EBA regulation since January 2011, ever since we were created. But that was then significantly enhanced just 15 months ago. So in January 2020, we received an enhanced mandate on money laundering, terrorist financing. Now not only responsible for the banking sector, which was previously the case, but now we are also responsible for the insurance and the investment sector. And we have to fulfill our mandate by, and these are the 3 terms that you see in that circle there in the middle, by leading, coordinating and monitoring the fight against money laundering and terrorist financing in the European Union. And we do that through various ways. It's probably a bit small print and you might not be able to read everything. So we lead our work, we fulfill our mandate to lead the AML CFT mandate by reviewing the implementation of law in national authorities. We have, for example, implementation reviews where we visit every national authority competent for AML CFT supervision in a particular jurisdiction and the financial intelligence unit. And we even speak to banks. It's a one-week event from the morning to the evening where we review how a particular jurisdiction has actually implemented AML policy. So we started this 15 months ago. We've now gone through, I think, 11 authorities, 11 member states in the EU, and the rolling program, and we will continue doing that for the next year and a half until we've gone through all 27 of them, with the focus, of course, to enhance AML supervision and also AML CFT compliance across the financial sector. We coordinate by facilitating lots of information exchange We set supervisory priorities for ourselves and for the national authorities, and we liaise with financial intelligence units and other bodies. And then we monitor various activities of financial institutions. For example, we have created last year guidelines on colleges, AML colleges. Some of you may be familiar with the concept of colleges, which is where prudential regulators, supervisors come together in respect of one financial institutions, and they come together from various jurisdictions in order to discuss the state of compliance of that particular financial institution. That has been around in the prudential space for quite a while, but it's now being rolled out to colleges for AML purposes as well. So it's the AML supervisors come together, and sometimes even the prudential supervisors come along. We've developed guidelines on how this should work last year, and it's now being rolled out. And I think throughout this year there will be around 300 of such colleges that are going to be created. So that's one of the, and we are participating as observers in those colleges, and we are monitoring how these are working. So it's a key enhancement to the AML objective of the EBA that we received in January last year, and additional resources as well. And we are focused a lot on fulfilling this enhanced mandate, and it's actually one of the 5 strategic priorities of the EBA this year and also next year. Thank you very much. Next slide, please. Here are some of the legal instruments that we've published, and I see now that they're actually rather small print, so you might not be able to see those. So a large number of technical standards and guidelines and opinions that we've issued in the area of AML CFT over the last years or so. Those that are marked here in orange are those that we've issued this year. So we have on the left the guidelines on money laundering, terrorist financing, so-called risk factors, and I will have a few slides later to explain what this means. We have also guidelines on risk-based AML CFT supervision. So that's more addressed to the national authorities, although there are lots of things that are of interest to financial institutions, of course, as well. We have an opinion on money laundering, terrorist financing risks here in the middle, the orange box in the middle, which we issue every 2 years, and we've just issued a couple of months ago the 2021 edition. I will focus on that also with a few slides in a minute. And then we have an RTS on the central AML CFT database, also very important. We issued a consultation paper just 4 weeks ago. It's a very, very important legal instrument and kind of a bit of a paradigm shift in the European Union, because the legislators have written into our EBA regulation the mandate for us to develop technical standards that set out how the design and the use of a central AML CFT database in the EU, which is going to be populated by supervisory authorities. So all the information that they have about the weaknesses, material weaknesses of financial institutions in their money laundering, terrorist financing controls will be entered into that database. And all AML supervisors across the EU, and even prudential supervisors and consumer protection supervisors, are required to feed that database, and they can also approach the EBA with so-called reasoned requests. So they can ask us to provide them with content of that database, and they have to provide a reason why they need this information, of course. So this is a database basically that for the first time centralizes all failings as well as weaknesses in AML CFT supervision across all financial institutions in one single place, and accessible, of course, only to the EBA and the supervisory authorities. This is not a public database, but it's a very important cornerstone of the fight against terrorist financing. And then we also have some guidelines on the cooperation between prudential and AML supervisors, which we are also issuing this year. So all of that is happening this year, so that you know what we are focusing at the moment. And let me just now present a few slides on 2 of those instruments. Can I have the next slide, please? So the first one will be a focus on the so-called money laundering terrorist risk factor guidelines. So these are guidelines that should be used by firms to identify risk factors and assess money laundering terrorist financing risks, to adjust the type and extent of their customer due diligence measures in line with that risk, and to understand the supervisory expectations. So the guidelines here harmonize what the supervisors expect to happen from financial institutions across the 27 jurisdictions in the EU. Competent authorities should use the guidelines to assess the adequacy of firms' AML and CFT policies, and also the procedures that have been put in place, and also to inform the money laundering terrorist financing risk assessment of their sector in their jurisdiction. So this is the focus of the guidelines, and we've issued them already 2 or 3 years ago in the first edition. Next slide, please. Then there came the case mounted for us to review the guidelines and potentially then to revise the guidelines for a number of reasons. The first one was that in 2019, the so-called AMLD5, the new version of the AMLD, entered into force and became applicable, and that was transposed at a later stage across the EU in member states. We also identified some new and emerging risks that didn't exist beforehand. We had our first findings from those implementation reviews that I referred to earlier, where we go into a jurisdiction for a week, talk to firms, talk to the FIU, talk to the AML supervisor, and see how they are implementing European Union AML CFT requirements. And we had some first findings that we published. So this is also publicly available, anonymized, of course, but it's publicly available in a report. So we identify and summarize the issues and the progress that we have identified during those reviews. So we saw some lessons learned there that we wanted to incorporate in the guidelines, and then there also the European Commission so-called post-mortem report, post-mortem review of things that have happened in the past. Those lessons learned we wanted to incorporate as well. So that built the case to review the guidelines, and we decided to revise them. And the updated version was then published in March this year. Next slide, please. The guidelines are structured into 2 sections. There's a general section that applies to all firms. And then there is a second chapter, which is AML risk factors specific to specific sectors that should be read in conjunction with the general part. So there are new sector-specific guidelines that we've added, such as on crowdfunding platforms, on corporate finance, on so-called payment initiation service providers and account information service providers that you may be familiar with under the PSD2, as well as firms that offer currency exchange services. So these have been added to those guidelines as sector-specific sector-specific guidelines and the risk factors attached to them. Thank you. The next slide, please. I think the key elements are in the guidelines is we list the risk factors that should be taken into account. We then explain how they should be used in a risk assessment. And then we also explain what the implications this has for risk-sensitive customer due diligence measures that firms should be putting into place. The overall goal should be that it's a proportionate and risk-based and also effective AML CFT regime that supervisors supervise and firms comply with. Next slide, please. The main change that we have made in those revised guidelines is we have clarified our expectations to firms' business-wide and individual money laundering, terrorist financing risk assessment. We have introduced new guidance on EDD and related to high-risk third countries, which is also a very political topic. More details on terrorist financing risk factors that we had previously in there, again making use of some more intelligence that we have received and lessons that we have learned. More details on the customer due diligence measures that should be taken, including on the identification of the beneficial owner, the use of innovative solutions to identify and verify the customer's identity. And it's actually a separate set of guidelines that we are currently working on digital identities and remote onboarding, where we probably issue a consultation paper in the 3rd quarter of this year, where some of you may have a keen interest to read those and let us know what you think. And in the guidelines here, the risk factor guidelines also reiterated the fact that there is no requirement for firms to discontinue services to entire categories of customers that they associate with higher ML-TF risks. So the buzzword here is de-risking. So we clarify in that opinion and other legal instruments that we've issued earlier this year that nowhere in any anti-money laundering law or EBA requirements are firms required to de-risk, i.e. to offload, to offboard customers or categories of customers because they consider them to be too much of a risk. This can be warranted, such offboarding or not accepting new customers, individuals as well as firms. It can be indeed warranted in certain cases, but we have seen an overusage of that particular approach to the detriment of financial institutions and individuals. And that cannot be. If you have customers that are higher risk, we require you to apply effective risk management. That may be more costly compared to offboarding them, but then there's also an option for you to charge such customers potentially higher fees than you would be charging others. But we require financial institutions to risk manage their high risk customers. Thank you. Next slide. I think I have only two slides left. So the other focus is the opinion on money laundering, terrorist financing risk that we also incidentally issued in March. We issue this every 2 years. So these are the risks, the money laundering risks that we identify in the European Union. It's an opinion addressed to the national authorities, not to US financial institutions, but to the national authorities, to the competent authorities for AML. Sorry, not national. Sometimes they are also supranational. So the opinion identifies and assesses those money laundering and terrorist financing risks in the financial sector, in the banking, insurance, and investment sector. We propose actions to competent authorities to mitigate those risks, and we also inform the European Commission supranational risk assessment, as it's called. The competent authorities should use the opinion to inform their risk assessments, and the firms should use the opinion when carrying out the business-wide risk assessment, because it may be quite helpful for them to understand what we see on the horizon on money laundering, terrorist financing risks, how they evolve in the European Union, and that may affect therefore their businesses. And next slide, which I think is the last one. Last but one, sorry. So the content of the opinion, it addresses both risks on a sector, again on a sector specific basis, but also risks cut across all financial sectors. Some of the course-cutting risks that we identified in previous editions of the opinion, because it's now the third one that we are issuing, continue to be of very high relevance even today, such as on virtual currencies, where there are huge money laundering and terrorist financing risks. You may be familiar with the European Union Commission's proposal, but we all on so-called MiCA on virtual currencies, but we're also expecting some requirements to be articulated in the forthcoming review of the AMLD and AMLR, and some other issues with with innovative financial services. We also identify and deal with and address other risks, such as the differences in the treatment by competent authorities or financial institutions, involvements in facilitating or handling tax-related crimes. The buzzword here is cum ex cum cum. So dividend trading arbitrage schemes, where we also take a position in that opinion about what the risks are and what national authorities should be doing about this. We also address de-risking. I mentioned it earlier for the other guidelines, so I don't go into detail here. And also some money laundering, terrorist financing risks that have evolved as a result of COVID-19. And we in that opinion, we have an interactive tool, and I have a link here where you can actually see all the charts and where it's quantifiable, the articulation about how important and relevant certain risks are, because the opinion is based on information that we have received from a number of sources, most importantly the national authorities themselves. So what they have told us across the EU, that is the basis of that opinion, and it may be therefore relevant for some of you, in particular if you're operating across the EU in several member states. Here you have a good overview. Next slide, please. And I think that is the last slide. If you want to be informed, also rather kept up to date on our money laundering, terrorist financing requirements that we issue, we have a newsletter. If you click on that link, you can subscribe to it, and you will be updated every 2 months or so what's happening. And with that, I conclude. I think I've slightly overdrawn by a few minutes, and I'm grateful to respond to any questions. And I see there are a couple in the chat already, which I have not had a time yet to read, but I will do now.
And perhaps a comment. we are really glad to have you here today with us. So take your time. There is no hurry. We can, try to fit in with the second material.
Yeah. So I have here a question. Going forward, what would be the articulation between the EBA's role and the future EU AML authority, which has been announced by the EU political body? So that's a very good question. As you may or may not be aware, quite clearly this requester is aware, in July we are expecting for the European Commission to publish a proposal on the future anti-money laundering regulatory and supervisory framework in the EU. So the Commission is working on proposals to amend the AMLD, but also to convert some of the AMLD into an AMLR, so an anti-money laundering regulation. And similar to a technical standard, an EU regulation does not require any national transposition and implementation. So that will be very important. And as part of that process, apart from the regulatory requirements, the Commission is also expected to propose the creation of a new EU central authority for anti-money laundering supervision, which we as EBA, we are not. We are regulating, we are developing requirements, but we have no direct supervisory responsibility for any financial institution. That remains the responsibility of competent authorities in the member states. And here the Commission will be proposing a change, a significant change, to create a very significant EU central authority to exercise a direct supervisory role of at least some of the financial institutions in the EU. And we consider that to be a very sensible approach, because the risks, some of the money laundering, terrorist financing risks do not stop at borders, and to have a central EU agency overseeing this will be very useful to do. We'll see what the details of the proposals will say. We'll have to await the negotiations within the Council and the Parliament and to see what the end product is, which is probably going to take a year or a year and a half until the negotiation is through. And of course, the EBA will do everything to make the transition to that new supervisory architecture in the EU as efficient as possible. Already now we are preparing, for example, that database that I referred to you earlier, to make that easily portable to that new authority, so that it's not proprietary to the EBA, but can be ported to that authority if the future, or any authority, if the future supervisory architecture would require that to happen, so that we have a smooth transition and that that there's no gap at any point in time. And of course, we ourselves, we still have the mandate that we have. I articulated that in my third or fourth slide earlier. And until that new authority comes into place, with whatever the powers will be and the mandate will be, we will continue exercising our mandate that we have been given until the very last day. So that's the answer to that particular question. What is the EBA's position to artificial intelligence usage in AML area? Are you going to regulate such topics? Do you perceive a characteristic of AI as limitation? I refer to the fact that there is limited possibility to explain and justify the result. Okay, very good question as well. So I think this artificial intelligence is probably only one facet of the wider topic of RegTech. Regulatory technology, so that technologies that a financial institution may decide to use in order to comply with requirements. And here, artificial intelligence is one, but there are lots of other facets that are very fascinating. We are keen to facilitate the take up, but not all RegTech solutions are equally effective. We will definitely never endorse any particular RegTech solution. So those of you who might find it desirable that someone like the EBA will give a sign of approval to any particular RegTech solution that anyone has developed, this will not happen. But we have views on RegTech. We see what's out there in the market, and here I would probably ask the requester just to wait for another 3-4 days. Until we publish our RegTech report, because we have done a lot of analysis over the last 9 months about what RegTech solutions are in the market, not only on AML, but you will find other topics as well, whether it's consumer protection, whether it's some potential compliance requirements. And we have asked the market as well, so we've interacted with the market across the EU, and we've asked them, so in what areas do you actually use RegTech solutions? And we've seen an uptick, so RegTech becomes more and more popular, in some areas more than in others, and you will see in what areas this is popular, and we are glad to see that. We're happy to facilitate it, and you will hopefully find some interesting information in that report. It's a EBA report on RegTech, and I think the publication might be end of next week, if I'm not mistaken. So if you want to maybe subscribe to that newsletter, or just go on the EBA website on the news item, we have a newsletter there as well. Then you will be informed about that. I don't know whether there's time, Nicola, Pavel, to answer another question, or am I overdrawn already?
For sure, please feel free, to answer all the questions we received.
Okay, do you intend at some point to collect and compute data directly from banks? So such data collection from financial institutions does in nearly all cases require an explicit mandate from the legislators, because that is quite a burden on financial institutions to actually provide the data. Such a burden we would not want to impose necessarily through own legal instruments that we can issue on our own, but we would probably want the legislator to give us a mandate, for example, in a technical standard, to retrieve that data from you. At the moment, there are no such plans, but it is well possible to come back to the previous question that was asked, that new EU supervisor, we'll have to see what the powers and the mandates and responsibilities of that supervisor will be. But if there's a direct supervisory role for that supervisor, then there will also be very, very likely to be a requirement imposed by that supervisor on the financial institutions that are within the remit of the central supervisor to provide data to that supervisor. Again, we are not a direct supervisor as the EBA. We don't have that mandate, and therefore we don't also have not necessarily that much of a need for that data. But that new supervisor will most likely have that need, and then it is very likely, I would expect there to be data reporting requirements going forward. So that's probably the question to that answer. Sorry, the answer to that question. Sorry. What is it? Do you see upcoming evolution in the public-private partnerships area of for the fight against ML? Yeah, that's so. Sorry, I should articulate for everyone in case you have not seen the question. Do you see upcoming evolution in the public-private partnership area for the fight against money laundering? Yes, we do. Public-private partnership is very important and a bit underdeveloped at this stage, so we are keen for that to be fostered and to be promoted and to be made use of. No concrete plans at the moment because we have so many other mandates to fulfill, but it's definitely high on our agenda and on our radar. And then the last question I see is, do you see convergence between cybersecurity and AML? Not so sure whether I understand that question. Of course, AML is an important component of cybersecurity, but cybersecurity for us has lots of other aspects: resilience of the institution against such attacks, being able to continue to provide services, maintaining the integrity of data, and so on, which are less linked to AML. So I'm not quite sure whether I understand the question. I'm probably not able to answer it in the way that the requester would have liked me to do. Yeah, I think these are all the questions that I can see. Unless there is any additional question, Nicola or Pavel, that you want to ask me or that you do see and I don't, and I'm happy to provide those answers as well.
No, thank you very much, Jeff. This is very, very interesting. I think that we covered a broad perimeter of topic, and maybe we could move forward with Pavel, and then we come back to you should the participant have additional question in the course of a presentation. Thank you very much. So if we can move to the next slide. Yes, we'll start with a couple of figures we would like to share with you, just to remind that the pressure to tackle anti-money laundering and financial crime has never been greater. And like mentioned by Dirk, there is strong expectation from authorities, but also from the, and maybe sometimes most importantly, from the public opinion. And when we talk about anti-money laundering, there is always a question of what is the magnitude, and it's difficult by nature to measure financial crime activities because they are illegal by nature and trying to remain below the radar. But there is a consensus that approximately 2.5% of GDP is laundered every year. So it is an average, so it can lead to 1 trillion to 2 trillion USD, just showing the size of the issue. Regarding the cost and the expense for the institution, here is an extract from a survey from a data provider, which has been released last year. And the total cost of compliance for anti-money laundering for financial institutions, here we talk about banks, investment firm, asset manager, and insurance entities, is estimated to 180 billion USD per year, and 60% of this cost being related to labor cost compared to 40 for technology. So it just shows the size of the size of the investment needed by the institution. And nevertheless, the framework remains quite frustrating, since it is estimated that less than 1% of illicit flows are intercepted. So frequently, the framework monitor a lot, but catch a few. So there is definitely a room to reinforce and optimize the framework, and the subject is definitely at CXO's level and within the boardroom. Can move to next slide. So here it's just a recap of the challenge, the common challenge the industry is facing regarding anti-money laundering. So we see a matter of the regulatory pressure, we discussed extensively, a global complexity for groups which are present across several countries. So regulations are not fully aligned. It's sometimes difficult to gather information. Third point, there is a changing market. Consumer clients a bit changed quickly, leading to obsolescence for classical monitoring tools. There is also the digital disruption. So banks clients are becoming more digital with more extensive remote relationship, and this needs to be integrated in the existing framework. There is a cost pressure I mentioned. So the burden can be heavy, and considering criminal offense risk, institutions have to treat requirements appropriately. Rapidly evolving threats, so new technologies, open systems, which create new risks for fraud and new ways to launder money. And maybe this point is to make the link with the question which has been raised before regarding the articulation between cyber and money laundering. We see some adherence to some extent. And there is obviously the impact of COVID-19 with several aspects. Fraud, we have observed some fraud related to the trade of medical supplies, renewed opportunity for laundering fraud and scams regarding false transfer order, fraud, the calls for donations, misappropriation of state guaranteed loans, and so on and so forth, and also breeding ground for aggressive investment strategy. So due to the economic deteriorated environment, some companies with cash flow difficulties can be led to open their capital more easily to investors with dubious interest. So it creates also some things to monitor for banks. So the context remains challenging and demanding for the financial industry. And what we observe in practice, this is the right part of the slide, we see that banks are at different stages. More mature, you see here the typical journey for banking institution, from securing the framework to a more innovative approach. And we see that now banks are different at the inflection point, moving to next generation approaches. And we see that this trend is accelerating, and Pavel will provide a few insights in this area in the next minute. So you see challenging context, but nevertheless, opportunity to reinforce and improve the system and to remain confident in the future. So Pavel, I hand over to you.
Okay, thank you very much. And if I may ask to go to the next slide, I will try to provide a little bit more in-depth information regarding the challenges that financial institutions may change. may face. So basically, there are a few areas where those challenges could be visible. The first area definitely is connected to legacy environment and legacy system. Of course, we are aware of the fact that, let's say, different financial institutions are on the different level of advancement, but mature institutions, mature markets are very often, let's say, having the problems of legacy systems because they are already in place, they are already functioning, they are covering bits and pieces of the, let's say, regulatory requirements, sometimes overlapping with each other. And very often, let's say, were not designed and were not built to provide relevant capacity in terms of number of processed information, number of processed data. So this is the first challenge that could be faced. The second one actually is connected to the strategy, because from the design, very often it was the fact that events in certain, I would say, different areas were analyzed in isolation, so were analyzed quite separately, which was perhaps efficient, but on the other hand, it were not showing or unable to understand the full picture. So this is the second element that could be perceived as a challenge. The third one is connected to leadership, because actually very often organizations and let's say managers are concentrated on achieving short-term goals and realizing short-term actions, and let's say more concerned with ensuring compliance with regulatory than real assessment of the let's say efficiency of the process and prevention mechanism. So this is also which may, let's say, be some kind of a barrier for really effective environment for AML. And last one, which we wanted to show here, is the cultural element, because cultural is also quite important. We, let's say, as people, but also we as financial institutions, very often are reluctant to, let's say, openly discuss the events that we faced and also try to learn from that. And I think there is definitely a value which could come, let's say, for the market from the events happening in various institutions, because the schemes that, let's say, we could observe most probably are similar going throughout the market. So if I may ask you to go to the next slide, please. I perhaps should also state what is the current or traditional monitoring infrastructure and what could be or what's important for the future. Because what we are coming from is really looking like the picture on the left-hand side of the slide. So basically, there are certain tools and certain, let's say, elements of the whole system which were done, which were prepared, which were implemented over time, and which covers, let's say, certain elements as they were implemented also from the regulatory perspective or regulatory requirement perspective. We have sometimes overlaps between those elements. We sometimes have, let's say, gaps which are unaddressed and which are being fulfilled with the new tools and solutions. And let's say it only led to the fact that very often this infrastructure is quite fragmented. On the other hand, also quite good illustration on the right-hand side of this slide. So basically, at least our perception of the target solution that could be used or could be tested in many organizations. So basically trying to combine data flowing from three areas. First of them is cybersecurity. Second is fraud and fraud detection. And the third one is AML. And right now trying, let's say, to put all those information together and leverage from all those information, build models around those three data sources is really the challenge for the future. So if I may ask to go to the next slide. I will also try to summarize 6 elements that are visible as some kind of, let's say, advancements or innovations to the whole infrastructure of monitoring tools, technologies, and let's say market tendencies. So the first one of them is still improving and the necessity to improve detection capacity. Because let's say there is more and more data coming to the organization, but on the other hand, especially during the COVID time, there is a tendency for increased, let's say, attempt to financial crime, to commit financial crime. So basically, there are quite many and quite increasing number of alerts that are popping up, and definitely there is a need to improve, let's say, the detection side. The second point is also very often visible because it's, let's say, a necessity also to increase the operational efficiency to process the alerts that are coming up. And basically, very often right now the organization are trying to close those, let's say, gaps, and are trying to close those challenges using the RPA, so robotic process automation, and artificial intelligence, and those tendencies are, let's say, quite visible. Especially the robotic process automation is perceived as let's say, quite, I would say, useful and easy way to reach for optimization in this area. The third one is scalable technical platform to respond to the new risks, and it's also quite important because the technical platform very often defines the, let's say, level of data which could be handled, and defines the performance. So this is quite important. Of course, it's, I would say, connected also to some kind of a cost level, which is also defined or brought from the side of technology. Speaking about costs, for sure, let's say there is still a cost pressure, or perhaps I should say differently, the cost pressure is even higher over last year, at least from my experience, because let's say banks and other financial institutions are hit by the, let's say, COVID effect, and definitely the results are under stress. So basically, due to that, there are two elements which could be visible. So the first one is transition to the more flexible solution, or to the cloud solution, basically to enable, let's say, technical platform to work in a more efficient and effective way. And the second one, which is quite important from my local perspective, from Central European perspective, there are still a number of institutions which are trying to, let's say, optimize the cost through outsourcing or through considering nearshoring and offshoring models. I know that we are speaking about this tendency for years right now, but even now after COVID, hopefully after COVID, let's say we see that there are some local attempts to still use the same, let's say, tools as in the past. And last 2 points are actually connected to agile architecture and data platform, which, let's say, needs to be set for the AML. And point number 6 is easier access to data for a better understanding of operations. And if we may move to the next slide, and I hope Nikolai will be able to cover, let's say, a bit the models which we can see.
I will make it short on this slide, considering it was slightly behind schedule. It was just an illustration of what has just presented Pavel, the fact that a data-centric model allows to have a framework easier to use for the sharing of information. And when we talk about the sharing of information, for a large banking group, it can be either with the within the group, so between parent company entities, between entities themselves, or within an entities, between different departments and teams. But it can be also with the outside world, either with peers or supervisor or authority. So the data-centric approach are definitely useful to facilitate the exchange of information, and to some extent, ultimately, like mentioned by Dirk, will facilitate the private-public partnership. I think we can move on to the next slide.
Yes, and actually on the next slide, I can cover a few elements, let's say, starting from where we are right now to present, let's say, the tendencies which could be observed or could be expected for the future. Because right now we start from the left down part of the slide. So basically, from the situation when very often physical security and cyber is integrated. We also hopefully can say that user behaviors are quite well analyzed and modeled, and basically this is embedded in the AML practice. On the other hand, we could also see the tendencies to combine the AML with fraud detection, both in terms of, let's say, the IT support, the IT models, and the systems, which are very often taking those two elements into account. What we could say, or what we could expect for the future, is integration also between fraud detection and cybersecurity. Actually, to create one data lake, or to create one, let's say, area in the data warehouse to enable, let's say, to work on those data together. This could lead to, let's say, enriching the ML with the cybersecurity data, and in this way enhance also and enables to unify data model and, let's say, leverage from that. The next step, which could be observed, is the integration of response processes and the joint investigations. So this is more or less, let's say, how this situation develops right now across various institutions, depending on the level of advancement. Actually, we have 2 slides left, but as we do not have, time to, let's say, prolong this presentation, I could perhaps cut it right now. For sure, the whole material will be visible to you because it will be placed on the website. For the time being, I wanted to ask you if you have any additional questions and additional comments that we need to, let's say, concentrate on. I don't see any questions, any comments. If you have any last points, please type them now. And if there is nothing to be covered from our side, perhaps let us thank, first of all, Dirk Houbrich, who was presenting the EBA approach and, let's say, the nearest expected changes to the comments and statements of the EBA. And let me also use the opportunity to say thank you to Nicolas, who was working with us on the whole material and the whole presentation.
Thank you very much to everyone. Thank you very much, Dirk, for your participation and all the insightful information shared. This is very inspiring. As mentioned by Pavel, anti-money laundering is definitely an important topic for us. So stay tuned. All Deloitte teams will remain at your disposal should you need any support. So thank you very much for joining today, and happy to remain connected in the near future.